All right, it is the start of a new week, and I'm going to talk through what I'll be looking for today. Well, over the last couple of days, the market has sold off quite rapidly. We are approaching a September low, and then after that, we will have a July low if this September low doesn't provide any sort of bounce. So that's where the market is trading toward. But so far today, we have seen the market start to pull back a little bit. We are already sitting at 1% up from the open. However, my bias is still bearish. As you can see, the last few days, clearly we're forming lower lows and higher lows, and therefore we are completely bearish. And therefore, even though we are getting a little bit of a pullback after such an aggressive sell off, I am not interested in any longs because I want to try and stay on the right side of the market. So I've marked out all of my 1 hour swing highs or my liquidity points where I want the market to make a run up to these highs, and then if we get a bearish confirmation, then we can look for shorts. So the only realistic high that I've got right here is this 11 a.m. candle from Friday, because these swing highs up here are 500 points plus from where we are right now, and therefore I don't anticipate the market's going to be trading that high. However, I have marked out as well this candle here as a swing point, because whilst we do have another 35 minutes left of this candle we're currently on, I think we might form a swing high unless, of course, this candle, 8 a.m. candle, actually takes out the high of the 7 a.m. candle. And therefore, if it does, then this does not become a swing point anymore. However, at the moment, we are beneath it, and therefore I've marked out that as a swing high as well. So my realistic thing is going to be looking for either one of these two highs to get raided, and then we can trade a short from there. What I'll be needing is some sort of bearish candle to close back in underneath the high, and then I can go to the 5 minute time frame and look for a inverse fair value gap or a fair value gap, something like that, with a maybe an order block, something along those lines, to confirm that the market is going to be bearish, and then I can get into a position. However, very important to note is that we have got Jerome Powell speaking at 10:30 Eastern time, and that speech could go on for about an hour potentially, and you never know what he's going to say. It's not a scripted speech. So I am not going to be involved in the market beyond 10:25 EST, because I want to try and act more professionally with my trading. And I think trading when such a important speech is going on, I think the risk is just high. You never know what he'll say. He might say something which will cause the market to spike either up or down, and therefore once we get to 10:25, I'll be completely out in the market. So realistically, the only trading opportunity I'm going to have today is if the 9 a.m. candle provides us with a swing failure pattern. If that doesn't happen, then I am done for the day. If it does happen, then I'll need to be able to get into a position straight away and then have it executed by 10:25. However, because of this speech, I do anticipate that we could get quite a choppy opening hour of the New York market. But we'll see. I'm not going to completely close off a chance of a trade today. I just got my expectations quite low. I'll quickly show you S&P 500, and all the exact same swing points are marked out. There are no SMTs, no nothing, and therefore it's the exact same chart. We do have a 1 hour swing point beneath us, which could get raided, and we could reject that swing point, this one right here, and we could reject that swing point and then look for a long. But as I said, I want to be on the right side of the market, and anyone right now can see that this market is clearly bearish. So I'm not interested in taking any longs. So that's all I have for today. Expectations are low. However, we'll be ready just in case.